Welcome, everybody. Thanks for chiming in today. This is the Global Agritourism Network North America chapter, our regional meeting, and we have a great topic today. If you have any technical difficulties or comments, please feel free to type in the chat. Please keep yourself muted and stay on mute unless you're speaking. And also, we're going to be recording this webinar today, this meeting today. The Global Agritourism Network does have a YouTube channel. It's the Global Agritourism Network YouTube, and you can find all of our meetings and webinars on that. So thanks for joining in today. Exciting. So just going to go to the next slide. Scotty, tell us who you are.
So I am one of the co-chairs. I'm Scotty Jones. I'm the founder of Farmstay USA. I'm also a farmer. So I have a farm here in Oregon, Leaping Lamb Farm, and I've been a Farmstay host since 2007.
Great. And I'm the other half of Scotty. I'm Kelly Cormier. I'm located in Alberta, Canada. And I'm a farmer's daughter, but more specifically, a rancher's daughter. So grew up on a beef farm, handling cattle, chasing cattle all over, loading cattle, moving cattle around. But my work career has been in agri-food systems and in tourism, and for the past 15 years in agritourism. And I'm also a member of the Global Agritourism Network Definitions and Standards Working Group, which we had a meeting very early this morning. So that's me. Thanks for coming today. So Scotty and I, as co-chairs, what happened at the end of last year is we did a survey of the GAN North America attendees, and we asked them, what topics were you interested in? So the schedule shows our topics for this year. So in January, we had Laura Patterson from Scottish Agritourism talking about the conferences coming up in June. Hopefully, some of you guys are coming. Today, we're going to be talking about insurance, which is a really hot topic with operators. Then in July, we're going to have our topic is going to be practicing your pitch. We find that it's really important for us to get comfortable telling our stories, whether we're at the farmers market or we're talking to customers or just talking to our staff. What is our pitch? So we're going to break into small groups and practice getting comfortable with our pitch. And then in November, we're going to talk about cluster or trail development. And then we're going to do another survey at the end so we know what everyone's interested in doing. We want to hear about your input for next topics. So Scotty is going to do a poll so we know what you guys are doing.
Okay, and here you go. So, oh, this is interesting. So if you can fill in what you do, who you are, you can fill in multiple choices. And then once you all have done that, I will, hang on. Wait, this is not the right one. Here we go. Hang on a minute. You guys stop for a minute. Don't do anything. Relaunch the poll. Okay, there we go. Now you guys can fill in information.
What is this? Allow access. Microphone. Allow apps. All right.
Here we go. I'm going to give you guys just a little bit of time. And then once it looks like we've got enough answers.
I don't know how to do this.
You don't? Do you see it on your screen? I see a bunch of people filling it in. But Kelly can't see it and I can't see it.
You got any ideas?
Actually, I can see it.
Okay.
Yeah, if you don't worry, if you don't want to fill out the poll or it's difficult to do, don't worry about it. Feel free to introduce yourself and chat. If you do see the poll, though, you can click on as many boxes or buttons as describe what you do and then hit submit.
Okay. Okay, so I've got 30 people out of 37.
Why can't we hear it?
I think what I'm going to do I'm going to end this poll at this. Well, no, I'm not. There's 31.
Maybe Candace, if I can get you to mute yourself.
Oh, no, dear.
Okay, I am going to end this poll. And so we will see what the results are. So I am going to share them here. Hopefully I can still see them when I share them. So hopefully you guys can see them. So it looks like, 50% of you guys are farmer ranchers or producers, but also we have 44% that are service providers, and educators at 31, researchers at 22. 19 at tourism professionals. This is insurance is probably one of the hottest topics that I hear about from some of the farms that are on farm stay, and anybody that I run across. And it's one of my top areas of concern. So I'm going to stop sharing this here. I'm going to close this. And we are going to go to the next slide. So welcome all. If you haven't put your name into the chat and where you're from, please do that so that we can capture all of that.
It didn't make any difference. See?
So I'm going to do this.
All right. So today's topic is agritourism insurance for operators. So I'm so glad so many of your operators are here today. We want to hear about what exists and what's needed. We want to have perspectives from Canada and the USA. So we're very excited and happy to have two lovely people that specialize in insurance speaking to us today. We have Carol from Canada. She's with MKM Insurance. And then we have Kelly Capel with Country Financial in USA. So having said that, we're going to go with Carol first to talk about the Canadian experience that she's noticed. But Carol, before we get to you, I'm just going to introduce you. So Carol was raised on a mixed cattle and hay farm in British Columbia's central interior. She was a 10-year 4-H member and continues to support 4-H in any way she can. Carol has been in the insurance industry for 35 years, and agriculture-related operations were not given the care and thought needed by insurance brokers. She has dedicated her career to being an agriculture advocate within the broker world. She has spoken at several agriculture events, focusing on the importance of understanding not only your policy, but the risks associated with your farming operations. And actually, that's how I met Carol, was she was speaking at Agritourism Alberta's conference that we just had a couple months ago. So Carol, thank you very much for coming. And I'm just going to start advancing slides. This is Carol's company and email, but we're going to have your email at the end too. So go ahead, Carol.
Thanks, Kelly.
Yeah.
I want to thank Kelly and Scotty for asking me to join you guys today. So I am going to have a discussion around farm liability and risk assessment. I think between myself and Kelly Capel, we'll probably cover off a lot of stuff that you guys are, asking, but I just want to get, dig down into risk assessment is one of the things that I think we need to talk about. Because farming is often, people think farming is just a peaceful lifestyle, kind of thing. But from a legal and safety perspective, farms are one of the most hazardous workplaces out there. So farms combine heavy machinery, livestock, chemicals. We have visitors. So there's just lots of potential for accidents, and legal liability is very real. So understanding your liability and conducting risk assessments helps farmers to reduce injuries, avoid lawsuits, and protect their business. So what is farm liability? Farm liability is the legal responsibility for damages or injuries to a third party. It can involve workers, visitors, or the general public. It can lead to lawsuits and insurance claims, and it's often tied to negligent or unsafe practices on our farms. So farm liability, it refers to the legal responsibility a farm owner has to a third party. So this could involve employees getting injured on the property, visitors being hurt, livestock causing damage, environmental contamination. So if a farm owner is found negligent, meaning that they didn't take reasonable steps to avoid the damages, they may be legally responsible. So we can just go to the next slide, Kelly. So some major risk areas on farms are machinery and equipment, livestock, chemicals and pesticides, visitors, which ties into our agritourism side of things, and environmental hazards. So farms are quite unique in that they combine multiple hazards in one workplace. So machinery, tractors, augers, combines, those kinds of things can cause serious injuries. Livestock, obviously, livestock can be unpredictable. Chemicals and pesticides, fertilizers and pesticides pose exposure risks, whether it's to the farmer themselves, the workers, etc. And visitors. So many farms now, as we know, are bringing in some agritourism exposure, farm tours, pumpkin patches, those kind of things. So we need to make sure that we're looking at those. And finally, we've got the environmental risks, such as fuel spills, manure runoff, the pesticide exposure, etc. So next slide here, Kelly. So I'm just gonna kind of break it down a little bit into the risks. So with machinery risks, we find that machinery risks are the leading cause of damages on a farm. So tractor rollovers are a big one, entanglement in moving parts, run over incidents, or poor maintenance or lack of training. So that could be with an employee that we're not training them properly on how to operate the farm machinery, and we do end up with incidents. So in Canada, the largest cause of fatalities on Canadian farms is around machinery. Some constant of the common incidents: tractor rollovers, people being run over by a piece of equipment because we're not paying attention when we're moving things, that it's clear in all directions, getting caught in machinery. So we need to make sure, again, that there's proper training and proper maintenance on equipment so that we avoid those risks. I'm just going to flip to the next slide here. So this is just a real world picture of an incident that occurred on a farm. It's a tractor rollover. So I don't know the exact details behind it, but let's just imagine he was operating on uneven ground or near a ditch. Tractor rolls over. There's no rollover protection. There's no structures, seat belts, those kind of things. We can potentially end up with a fatal incident here. So if investigators find out that the equipment was poorly maintained or safety devices were removed, the farm owner could face a liability claim, and especially if an employee was operating that machinery or a third party is injured due to that piece of machinery rolling over. We'll just go to the next one, Kelly. So when we're talking visitor liability risks, so this is what I think probably a lot of you are interested in with the visitors that come to our farm. So we have to look at a few things. Farms hosting visitors face some added risks: slips, falls, animal injuries, unsafe buildings or walkways, and the owner is responsible for safe conditions. So when we're inviting someone onto our premises, we have to ensure that our duty of care to that person is there, that we're providing as safe of a premise as we can. So if a visitor slips on an icy walkway or something, or gets injured by an animal, then the farm could be liable. So there's a few things. So if there's no warning signs, unsafe areas are not restricted, hazards are not properly maintained, then again, that liability could come back to the farmer in the event of someone being injured. So even something it sounds silly, but something as simple as poor lighting in a barn could lead to a liability incident occurring. And I'm trying to talk fast because I know we've got a really short time period for everyone. So I just want to just kind of talk about these next couple of slides here. Just throwing some pictures in. So the top right one, obviously a farm market. We want to make sure when we're doing our assessment of our properties, our walkways, the dirt is level so that there's not rocks and everything that people can trip over. the grain, I just thought that was a pretty picture. And then the bottom one where we've got the children feeding the animals here, I really actually like this. They've provided very stout fencing that would be hard for a child to crawl through. So this farm is, they're allowing them still to be in contact with the animals, but they're providing some additional care taken so that those children, which children we know are attracted to things like this, can't necessarily climb through that fencing. We'll just go to the next one. We're talking these exposures. Obviously, the broken fence is pretty much but when we're evaluating our own farms, unfortunately, sometimes we don't see those things. It's a third party coming on that says, oh, you got broken rails or those kind of things. So we want to be looking for that. The tractor hauling the wagon with the people up top, just want to point out there's a couple things that I am a little bit concerned about, and that is that we've got no protective barrier to there is at the front and the back, but in the middle, it's wide open that people could literally sit on those hay bales and flip out of the trailer. So we just want to make sure that we're looking at those kind of things. So those are just some examples that I wanted to point out before I get into the next slide, which is the risk assessment process. So what is risk assessment? So risk assessment is identifying your hazards, evaluating the likelihood and severity of an incident occurring, implementing safety controls, and then monitoring and reviewing on a regular basis to make sure that we're not missing anything. So it's simply that process of identifying those hazards and reducing the chances that they can cause harm. So I'm just going to flip to the next slide here. Oh, I think we're missing. Did we go one too far, Kelly, or am I out of order? I think we're missing a slide here. But anyway, nope, you can go forward here. We are missing a slide in here, but I'm just going to talk about a farm just as general. So when we're looking at identifying hazards, we're going to do like the general overview of our property. Do we have livestock that we don't want participants to be in contact with? If so, have we got proper fencing to keep them out of the way? Do we have signage that is a restricted area? Are we working on our property with farm equipment where the general public can come in and maybe be in the way so that we end up with a run over incident? So that's where we go back to the signage on our properties, being very clear areas that are restricted to visitors, that kind of thing, so that we can try to mitigate, the chance of those kind of things. We want to look at the storage of our hazardous materials. We want to look at, I always try to say, look at it from the point of a child, in the sense that kids are attracted to things that look like they'd be fun. So if we've got a precarious pile of hay bales, maybe we want to have that either fenced off or the hay bales stacked properly so that they're not going to cause a problem when kids decide they're going to hop over the fence and go climb on the hay bales, and the hay bales, fall down and someone gets trapped under them. So we want to make sure that we're looking at those things. So when we're evaluating that risk, we're going to say, how likely is it to happen? Would it be serious if it did happen? Implement those controls, I guess we would call them, safety guards, training, those kind of things. Things on farms change constantly. So that's why we talk about monitoring and reviewing this on a regular basis. We want to make sure that you're keeping your eyes wide open on your farms, making sure that, if we've added, I'm just going to say another building, for example, if we've added another building onto those premises, are we making sure that that is going to be safe for people to either visit it, go inside it, those kind of things. As farmers, and I grew up on a farm, so I understand it. We lots of times don't think of that sill going into a barn because we just know it's there and we just walk over it every time we go in. But a visitor maybe knows it's not there. So let's make sure that it's highlighted or something, that there's a step there so people don't trip and fall going into an area. So just things like that. So now we can move on, Kelly, to the risk management strategies. So what we're looking at with risk management management strategies. Some of the key things that we're looking at is liability insurance, worker training, safety signage, equipment maintenance, and then documentation. So there's several ways that farmers can reduce their liability risks. The first one obviously is insurance. We purchase insurance to transfer the risk to a third party. So when we buy our liability insurance, we're saying, okay, insurance company, you're taking on the risk for me that if I get sued because someone's had been hurt or there's been property damage caused by my operations, that insurance company then is going to handle that lawsuit. So liability insurance is important because we need to make sure that we're providing adequate limits that are going to protect our farms in the event of that lawsuit. So we're going to have to look at the limits that are involved in the liability, what additional coverages they cover, because we want to make sure that we're literally having enough coverage in place that you aren't potentially going to have to sell the farm in the event that you're sued. So the second thing that we look at, which I think is important, whether it's your family, whether you have employees, but is the training on the farm, so the worker training. So we want to make sure that everybody is trained with the safe operation of equipment, that they use the safety equipment that is attached to a tractor, for example, like rollover protection, those kind of things. We want to make sure that everyone's trained consistently and uses the equipment in the same way. There's lots of safety checklists that you can find on the internet, and I think it's really important maybe that we be looking into that. And like I say, not even if you don't have employees, let's make sure that everybody on the farm is operating the machinery in the same way. And then clear signage, so safety signage. When I talk about signage, the do not enter areas, this is a working farm. There's risk of, injuries due to like those kind of things. We want to make sure that we've got that signage. When we're putting that signage up, we're warning the general public, I guess, of the inherent risks that could come from being on that property. When we're talking about equipment, so I've got it in here as equipment maintenance, but I'm going to call that equipment and building, your property maintenance. We want to make sure that that is an ongoing thing. We want to make sure that buildings are upkept. We don't want to see, roofs that are starting to cave in, those kind of things where people could potentially get into those buildings and be hurt if something happens. And the equipment maintenance is important as well, because if we don't maintain our farm equipment and something occurs because of our lack of maintenance, again, that can come back to you that you were negligent in doing what you should have done and can lead to that liability claim. And finally, I want to talk about documentation and safety records. So keeping records is really important when it comes to the insurance side of things. So you keep records of the training, your safety inspections, equipment maintenance, all those kind of things can show due diligence in the event of a liability claim. So if you've got it very well documented that, these are all the steps that we've taken, this is when it's happened, and somebody sues you for their property damage or their injuries, and you can say, look, we do this on a consistent basis, it's been done on a regular, it really lends well the farmer's argument against liability risks. So really, in the end, risk assessment isn't just about avoiding legal problems, but it also protects the workers and the families. It reduces financial loss on the farm. It will improve productivity, and it builds trust within your community as well. So if we are a well-run operation and things are neat and tidy and people feel safe coming to your premises, that's what's built that trust within your community. So someone that's been on your farm, they had a great experience there, then they're going to pass that along by word of mouth to the next person, say, you need to go to Carol's U-Pick farm because it's just fantastic. They provide, everything's nice and neat and clean, et cetera, et cetera. So I think that's a big part of it that we need to look at. So, many accidents on farms are preventable just with simple safety measures that we look at. So we'll just go to the next slide, Kelly. So just kind of in conclusion, farms do face many safety and legal risks. Risk assessments will help reduce accidents. Understanding your regulations will protect your businesses, and safer farms protect the workers and the communities. So farming is an essential industry, but it's also a high risk environment that we live and work in when we're farmers. So understanding your farm liability, conducting regular risk assessments can all significantly help to reduce accidents and legal exposures for you. By focusing on your training, maintenance, safety planning, and awareness, farms can protect both the people that come onto their farm and their businesses all at the same time. Thanks.
Great. Thank you, Carol. So going to now go over to Scotty, who is going to introduce Kelly.
Yep. So Kelly has been working on farms and was doing 4-H as a child. She's based in Oregon. She also lives in Oregon. She's married with 4 boys under the age of 4 right now, so we are getting her in between feeding. She's been in insurance for 10 years with Country Financial and 8 years specializing in farm and agritourism insurance because that's where she kind of grew up and that's what she's most interested in. I do know her mother-in-law, so for transparency, she's my agent. She's also an affiliate with Farmstay. But I met her actually through her mother, who has a farm stand and a U-Pick operation, who was having issues with insurance. And so Kelly has actually become the go-to for Country Financial when it comes to agritourism. So I think that gives her a good enough introduction to let her go from here. Okay, Kelly.
Thanks, Scotty. So Carol did a wonderful job explaining risk assessment and management, and pretty much everything that she mentioned does transfer over from Canada to the US. So I'll be talking more specifically as well about structuring and helping your farm business become desirable to an insurance company as well. As a disclaimer, as we get going here, insurance does vary by state in the United States. So I'm going to be talking, as generally as I can. Of course, if you have additional questions, feel free to ask me or my team. We're happy to assist or point you in the right direction. But just know that depending on which insurance company that you go with, they may have an appetite for certain types of businesses where others may not. So we can kind of help assess that as well. Next slide, please. So 3 main topics that we're going to be targeting today are risk mitigation, the best ways to structure your agritourism and farm business, and then lastly, core considerations in the insurance application process. Next slide. All right, so mitigation of risk. There are 3 primary things here that we take a look at: avoidance, transferring of risk, and acceptance. So beginning with avoidance, so this is where, if there's an operation that's so risky that it's impossible or highly cost prohibitive to insure. In most states, for instance, one thing that we run into a lot is like raw milk sales or the butchering of your own poultry or livestock without a USDA license. So sales of these items or crossing state borders in most cases is typically something that's prohibited and or not insurable. And if there is a carrier that can insure it, it's going to be at a very high price point. The reason why things like this are specifically very difficult or impossible to insure always comes back around to the risk factor. So if you can just imagine with whatever operation that you have, just put on a thinking cap of risk, because that's what insurance companies look at. They look at how risky is this operation? What's the propensity for loss or illness or accidents to occur? And things specifically with food products like raw milk and meat, insurance companies don't play around. They want to make sure that things are as controlled as possible and have as consistent of a process as possible. And just because there's so much variance in those types of things, just to give an example, it can be very difficult to insure things like that. The second piece of mitigation of risk is transferring. So that's what Carol and I are here to help with, is the transfer of risk. That's where you pay a reasonable cost to an insurance company to transfer the risk of your operation. And that is what insurance is. So ideally, you're entering a contract with that insurance carrier to take on the responsibility for your full operation. So we're talking liability, so trip and fall, or product. So that's where we're talking about illness related incidents and things like that. Your structures, so home, outbuildings, and equipment. So in an ideal situation, that insurance company is going to be providing protection for all of that. And the reason being is that that's the best way to protect your assets, everything that you've worked hard to build, both personally and in your business. If it's structured right, that insurance company is going to take on that risk and be able to cover any claims that occur from either a catastrophic loss like wildfire, hail, collapse of structures, or if somebody does get injured or sick from your product or while on site. And most carriers do want all or nothing. This is a question that we get asked a lot is, can I insure this part of my business, but not this part? And by and large, the answer is no. You have to insure all of it or none of it. And so we'll talk about this here in a couple slides, but we are able to kind of help help you assess, is it best to keep everything under one roof with the same entity, or split those up to be more desirable for an insurance carrier? Is that even possible? And is that also insurable with what you're wanting to do? And then third and lastly here is acceptance. So this is where we're talking about the retention of risk by financial loss to your operation. In other words, you're willing to take on the full financial burden if a loss does occur. As an insurance agent, I don't recommend this very much. Typically, the only times that we do, see this is related to a structure. I would never recommend that you accept a liability risk, which I'll talk about in just a moment. But with structures, for instance, let's say that there's a nice shop and a nice barn on the property. You want those covered. But then there's a rather dilapidated structure or an older building that you just really don't mind if it does go down. As long as you are willing to accept that risk of, if that building does go down, you can either pay to have it removed and rebuilt, or you're okay with taking that loss and not having that structure available anymore. That would be an acceptable risk here to accept on your own. When it comes to liability, however, I would never recommend that you insure, your general liability with the property, but not with your farm to table event that you're having on the property, or your egg sales that are coming from your property, or the farmer's market. Just because those, when we're dealing with the public, that we can get into some really high dollar situations where it's just much better to make sure that those are covered by an insurance carrier, because that can be a way that farms go under very fast. Let's go to the next slide here. All right. So best ways to structure your agritourism business. The first, we always recommend that you discuss your business plan with a lawyer. Our office we are not lawyers. We're not licensed in that, but we can kind of speak to that from an insurance standpoint. Different LLCs or entities for activities than your main farm operation can be a very good idea. So for instance, if you've got, you own the land and you do, berries, you grow berries, that can be insured on the farm policy. If we now have U-Pick and farm to table dinners and, petting zoo, like these other things that are coming into play, we need to talk about, are any of those items best put in a different LLC with a different insurance policy to cover it? Or can it be accommodated, and should it be accommodated on the same farm policy? So, for instance, as well, one thing that we often will see is people want to protect, their land, and then they want to protect themselves from their business operation that they have going on. A case like this may be you have ABC Farm LLC that owns the land, and then you have 123 Farm LLC that actually operates your business, whatever that may be. That may be, you're picking to go to the farmer's market, you're having people on your property, doesn't matter. In cases like that, where it's both are farming operations, like owning the land and having the actual operation itself, the reason why you have separate LLCs in the first place is to help to mitigate and divert risk, so that if someone does sue one entity, they can't take the assets of the other or yourself personally. That's why we split things up. However, it's mostly insurance companies will generally accept both operations on the same policy, depending on your carrier. But I do see this happen where they're kind of commingled. So you've got, the operating farm listed as the named insured on that policy, and then you have the additional insured as the owning entity of that property. Why that is not advisable, though it does save you some money on your annual premiums, is that if something did happen and someone got injured or sick from your operation, now they're pulling that insurance document that's coming in, to the lawsuit, and they say, oh, look, we have this operating entity and we have this owning entity on the same policy. Suddenly, the assets for both operations can potentially be looped into that lawsuit, and we don't want that to happen. So it is generally advisable to separate those out. If you have a different entity, they need to have their own insurance policies. Yes, it does cost a little bit more, but in the long run, if something did happen, you are properly protected and they are separate. That's the big key, is having that separation to properly protect yourself and your business. Also here, one thing that we tend to see is personal vehicles used in the farm or the business. So think, you've got a truck that you own and title in your name, but you use it to transport back and forth to the farmer's market. We see this often. It's not necessarily a bad thing. We just want to make sure that we're structuring it right for you. So that either can look like, if you want to keep it titled in your own name, having the proper liability limits on that policy, possibly talking about an umbrella, just depending on the assets that we are covering for you, to make sure that if you did get into an accident or something occurred, they're not going to be able to take the farm or dig into your savings accounts, but they just go after the insurance and are able to attack that and call it good. So that's our goal, is that they target the insurance and leave your personal assets alone. So we can either have it be done that way, or you can retitle the vehicle in the business's name or the farm's name and keep that on a different policy so that that's separate from you altogether. I've seen both work. And then lastly here, just understanding what activities that you have are most prone to excessive risk, or are normal to the industry. In this case, we're just kind of, putting on our risk assessment hats again and just saying, is this incidental to my farm operation, such as, you picking berries that you grow? Great, that's incidental. Or are you doing wholesale sales? Yes, that's incidental. Or are we talking more commercial operations, such as I've got a petting zoo on my property where I also grow my berries, or I'm doing a farm to table dinner, or I'm serving alcohol. Those are more commercial risks, not so much farm. So that's also where we might want to say, let's separate off that piece. It's going to go on a commercial policy as opposed to a farm. Things like that we just want to look at and discuss. All right. Next slide, please. Okay, so we have an example here of separating out operations, kind of like we discussed earlier. So we have Betty and Joe who own 50 acres where they live, produce berries, sell the berries, and operate summertime farm-to-table events. So in this case, because they do have some of that commercial exposure, which is that farm-to-table, we would want to advise separating into two entities. Next slide, Kelly. So those entities would look like Betty and Joe own the property and produce their berries on site. So their farm LLC and themselves could be on that one policy there. And then on the other one, that's where we insure the farm to table. So we have the farm to table name listed. It has its own policy. You'd have your own, separate records and documents for that as well, just so that it's kept as clean and cut and dry as possible. Next slide, please. All right, so core considerations during the insurance application process. So things that we always look at with our farmers, we want to see what you're currently doing and how insurable is it. So in some cases, do you have current insurance or are you a startup? Is what you're doing insurable as is? Have you been dropped by your insurance recently? And if so, why? We want to know these things so that we can best help advise to see, can we help you? Do we know of another company that can help you? We're going to help point you in that right direction when you come to us. We also want to know what your 5-year growth plan looks like, just because we want to know, maybe right now you're just starting up and you have, one thing that you're doing, but in the next 5 years, you plan to add, 2 more things to your business. We want to know so that we can tell in advance, number one, is this going to work? Is this desirable to an insurance company? That's what we're looking at is this a desirable thing? How can we help mitigate that risk and help put your best foot forward there? Going forward into the future. The third item that we look at is your loss history and or a lack of insurance. With Country Financial, we are able to cover a farm that doesn't have prior insurance history. Some carriers will not. It just depends on where you go. We also want to know, how risky has your operation been? Have you been doing a good job maintaining your property, limiting those risks, or do you have, things in the past 5 years? We look at the past 5 years that have caused losses. And if so, what's the dollar amount? What were they? We just take all of these things into consideration when it comes to insurance. And then fourth, we like to do a location assessment. So if you're close enough to our office, we will come out to you to do this. If you're farther away, we like to do a virtual walkthrough with you where we look at what kind of buildings and structures you've got on the property. Are some dilapidated? How good of shape are they in? Just to kind of know, can we insure this building? Or should we make it inaccessible to the public altogether? And, how to do that. Looking at the overall layout of your property, and then those ways as well to reduce potential risk. So, all right. Thank you guys very much.
Wow. Okay, that was wonderful for both of you. And I'm not sure if Canada is going to be different than the US in terms of how these questions are answered. So I am going to, there are lots of questions. They came in beforehand, and then we've gotten a lot on chat. So I'm going to go through these from the first ones to the end. And then if you, Kelly, or Carol want to chime in, let's go for that. Okay. So is petting zoo insurance enough? kind of open-ended, but that's the question. Is petting zoo insurance enough? I guess if you're welcoming guests onto your property.
Yeah. It depends. Depends on what you have going on and do you live on site? Do you not? Typically, I would say if you do live on site and you just have petting zoo coverage, that's not enough because it leaves other things and assets at stake there. It would cover specifically for people coming on site to, to touch or feed or pet the animals, but not anything else. So it all depends from my perspective, but I would say in general, petting zoo insurance may not be enough.
Carol,
I agree. I agree with Kelly on that. And I'm just going to, you're still going to need your own farm liability in place for just your general farming operations. And then the petting zoo insurance is a separate, again, what Kelly was talking about, that separate operation with a separate liability policy in place.
Okay. So then the next one is we have insurance, but we're unsure if it's enough. We just discovered we should be classified as an agritourism site. We're a nonprofit community garden farm and have insurance for that. Doesn't being classified as an agritourism site require different insurance?
That's a great question.
Again, yeah. Go ahead, Kelly, and then I'll answer from a Canadian perspective.
Yes. Yeah, I would say, in a case like that, I would want to see the current insurance documents that you have so we can see what you're being covered for. But we just want to make sure that there is proper coverage in place for, if you do have people coming on site and it is a community garden where people can, garden themselves, what are they using for gardening, what kind of equipment is there, like all these things that we want to take into consideration just to see if it is proper coverage or not.
And I'll just add to that, when I hear nonprofit community, do we have directors and officers that are operating that? Like, do we have adequate insurance on that side of things, the liability, the general liability, directors and officers liability for a nonprofit society, I guess is where I would look as well.
Okay. So the next question is, I'm having difficulty finding liability insurance for agritourism. I've tried for 4 years and no broker can find one. Are there certain questions? How does somebody find this? Are there different words not using agritourism be able to be covered?
Yeah, I think with that, just finding a carrier that does farms really well, and just letting them know what you're doing. And if they, if you're talking with an agent that knows what they're doing in the, agritourism space, and if you're willing, if part of the reason why it's not insurable is because we have too much going on in the same entity, or it's one of those risks that insurance companies does not like, are you open to restructuring how you're operating? Because that might be more manageable for an insurance company to take on.
Okay.
And my comment, I think what I would say on that, Scotty, is, they say they've tried for 4 years, no brokers will take them on. Have they had a broker visit? And are they dealing, again, like Kelly said, with an agritourism broker? If you're dealing with a broker in a downtown big city that has no clue what the agritourism marketplace is about, and it also lends to the brokerage that you're dealing with and the markets that they have access to. So if you're dealing with a broker that, has a strong background in agriculture, they're going to have access to those agriculture brokers and the agritourism and agritourism companies that are dealing with you out there. I would say one of the biggest things that flags me is did you have someone come and visit you and do, like Kelly said, and do a site walkthrough? What is making you uninsurable?
Yes.
Okay. So this is one that has come up several. Is there actuarial evidence available to farms to assess whether an enterprise is worth the risk? And if there is, where are you guys getting that information from? Where are you scraping the data from? so that farms know what
That,
they should and
yeah,
shouldn't do?
that's a great question. As far as the actuarial data goes, that, as an agent, I don't have direct immediate access to. I may be able to dig it up, but insurance companies in general do a lot of due diligence when it comes to making their decisions on what they will and won't insure. And kind of like we talked about earlier too, just depending on the carrier that you go with. Some say, if it doesn't fit within this box, we don't want it. And others say, we're willing to take on things that other insurance carriers may consider more risky, even if it might not truly be a more risky thing. I know some carriers don't like egg sales, for instance, because they say that's too risky. Whereas some carriers say, this is a normal thing. We do this all the time. So it's just going to depend there with, with the carrier.
And I think, again, be in contact with a broker. I think they should be reaching out. If you've got an idea in your head of something that you want to be doing, reach out to a broker and say, this is what I'm thinking about doing. Is there going to be problems getting insurance? Is this an insurable type of risk, or should I be, maybe changing my plans? Because that anytime a client approaches me and says, this is what I'm thinking about doing, then I can have those discussions with my underwriters ahead of time to know if that is something that we can look at potentially, and cost obviously is a factor, so I can say to them, okay, if you're only going to be generating X amount of dollars annually from this little change in operation, is it worth the money that the underwriters are going to be charging to take over that risk for you? So I think that discussion has to be made internally with a broker first, before you just are looking for, digging on the internet to see if it's actually insurable or not.
And so that comes back to then, how is that risk calculated by those underwriters? And how do you determine, is it personal, I guess, with your agent that they've decided that risk is okay, they think you do a good enough job? Or is that something that's totally out of your guys' hands even? Who are these underwriters? We all hear about underwriters. Have they been out on the farm? What are they looking at?
So they're gonna look at us. And Kelly has said too, she goes out to the farm.
Yep.
We're on the farms. We're on those farms. We know what's going on. So we have the relationships with those underwriters, and the underwriters are taking us at our word when we're sending in the information to them as to what risk we are looking to transfer to that insurance company.
Okay.
Mm-hmm. Yep. Well said.
Okay. So another question is, if you're feeding people on the farm, is the risk different feeding them your own produce versus feeding them something from another source?
So I can speak to that from a Country Financial perspective. As far as that goes, the short answer is no. So we would see it both the same. As long as it's, done under, your farm to table type entity, and we are insuring it there on a commercial policy. We don't really care if it's your own or from somewhere else. The only issues that kind of come back to, what I discussed earlier could be like if you're trying to serve raw milk or meat that you've butchered without a proper license. Those are really the sticking points that I could see. But aside from that, if you're growing, veggies, you're cooking some eggs in, some cupcakes that you're making, things like that, we don't have a problem with.
Okay.
I agree.
Okay. Then what are 2 to 3 things an insurer wants to hear or see when writing a new policy so that the farmer can get an affordable policy?
So what I often see is, we want to know that there's a clean loss history. If you can't get insurance and you've been operating without insurance for a number of years, that's a red flag to insurance companies, and your rates are going to be up. Sometimes you're still insurable, but you're going to pay for it by, saying, I don't have insurance, but I've been operating anyway. Insurance carriers don't like that. So if you have a clean loss history and you're currently insured, that's the best of all worlds for having lower rates. And then really from there, it just depends on what you're doing. If you're doing something with horses and you say this is an essential part of my operation, equine liability is more costly because horses do cause incidents. They're animals, they spook, they're big. And oftentimes people who are just visiting farms don't know a whole lot about horse behavior. That is going to increase your costs versus if you just have people come and just do like a walk through, if you're just doing like tours of your property where people cannot go in with animals, you don't have animals, you just have, a vegetable farm or garden, that's going to be much different in terms of risk than when we're talking about with livestock.
And I'll just add a little bit to that. There's a couple things that I like to see, especially a new venture. If someone's looking at a new venture, I want to see that they've got a business plan in place so that it's just not, oh, we're just going to do this. They've put their business plan in place. When I'm on site, I want to see that they've got some safety implementations with signage or potential signage that's going to come, that they've actually had that walk through themselves. I go back to my risk assessment, that they've done their own risk assessment. I'm coming in, I was recently at a farm and I talked to the owners about putting a secondary fence in place, and they were like, yeah, we can do that right away. So I think those kind of things that we need, if we can show that they're willing to work with both the broker and the insurance companies on, adding some additional protection in place, that's going to make them be a lot more attractive to the underwriters.
Mm-hmm.
Okay. So there's a question about liability waivers. Do those, if visitors sign those, is that worth it to have visitors sign liability waivers? Or
from my perspective, no, because courts will usually throw them out. But to prove your due diligence again, I do think that liability waivers should be signed. Unfortunately, in Canada, courts have decided that a parent cannot sign away the right of a minor to sue. So when a parent is signing that liability waiver, that's where some issues come in. But a lot of my underwriters in Canada still require a liability waiver be signed. So that's short and simple.
Yeah, pretty much the same in the US as far as, it's a good idea and a good practice to have a waiver signed. Does it prevent a lawsuit from going through? No. Can it be helpful in saying, I did my due diligence and having them sign it? Yes. So it's a good idea to do. It's not going to always hold up in court, but it does show that you were taking steps to help mitigate the risk.
Okay. So we're actually at noon. I'm just going to ask this one other one, and then maybe if people want to stay on, and you guys can stay on a little longer. So is there data of insurance claims that have been paid out for agritourism anywhere?
I don't know whether we'd be able to find it just in the general, Google searches, but I'm sure if we needed, we could go to our insurance companies and ask them if they've got, statistics on, property claims versus liability claims, etc. in the agriculture world. Like, it wouldn't be specific to agritourism.
Okay.
Yeah.
Okay.
Yeah.
Okay, then let's see, last question. There's just as a general education point, can you distinguish between product liability insurance, general commercial liability insurance, and agritourism liability insurance? I've seen folks buy one or two separately and thought they were covered.
Okay, say those again.
So it's product liability, general commercial liability, and agritourism liability. And I have a feeling that they're just termed differently in different companies, but.
Mm-hmm. Yeah. So your general liability is, typically like your trip and fall, your physical injury that can occur on site. And that's like, very foundational. So pretty much any insurance carrier that you go with will have that general liability piece in place. And then from there, it can be layered with or have the other pieces added. So like product liability, depending on the carrier, they might put, your egg sales or your meat sales product liability on the farm policy. Some may do a supplemental policy for it, but if you just have general liability, for instance, and you are selling meat or eggs, let's say, you're not covered on that policy for the meat and the egg sales. So if someone gets sick from those, your general liability policy is not going to kick in. So that's why it's important to have that piece there. And then like the agritourism piece, it really kind of comes down to what it is that you're doing, because most carriers, if you say, I want to see an agritourism liability policy, if you're dealing with someone who doesn't know agritourism or agriculture very well, they're going to say, what? We don't do that. But someone who does know the agricultural world will, they will be able to tell you what it is that they're looking at. And oftentimes it will come in the form of a commercial policy or an add-on to a farm policy. And it won't be labeled as an agritourism liability, if that makes sense.
Right.
Correct. So it's going to be what the policy defines as the operations of the insured. So when you're looking for a specific agritourism, and I'm just going to use, for example, the operations could be a petting zoo or, along those, and that's tied in with the general liability.
Okay. And you guys haven't mentioned umbrella policies. Is that something that
Kelly did bring it up?
Yeah. So is that something that all of us should put over our our general liability policies as well?
I would say it depends on limits of insurance that you're looking at needing,
Okay.
and what it is that you're actually trying to do with the umbrella policy. For people that volunteer on boards, those kind of things, I try to have umbrella policies on the majority of my farms. The reason I do is to make sure that we're having consistent limits across from our automobile to our farm.
Yes.
And the umbrella liability is just, it's a less expensive way of getting higher liability limits. But the umbrella does drop down if you were volunteering on a board and they didn't carry insurance and something happened, the umbrella, at least in Canada, will drop down to cover off your activities as that volunteer with an organization.
Mm-hmm. And just what I'll add with umbrellas is oftentimes, people will confuse an umbrella as, something that just is like a catch-all type policy. And they'll just be like, oh, I have an umbrella, I'm good. But an umbrella magnifies the existing policy limits underneath of it. And so it's not going to, if you have just general liability and, let's say that you do have, like the meat and egg sales again, but you don't have any underlying liability for that, the umbrella is probably not going to cover you. If you have a product incident where someone gets sick from those items, the umbrella is not necessarily going to kick in unless you have that underlying coverage saying like, hey, I do sell this, I'm being charged for it already, then the umbrella would come in as additional limits.
Okay.
As long as it doesn't exclude. And that's what comes into an issue sometimes with umbrellas, is that people do think that they're getting, and I'm going to use pollution liability as an example. So they think that they're getting that additional amount extending to their pollution liability, but the umbrella or the excess portion will exclude pollution liability, or it will exclude forest firefighting expenses, because they're not looking at topping up those limitations that are within the general liability wordings.
Mm-hmm. Okay, these are some quick short ones. For safety records, how often should those be done to make a insurer feel good? Annually, more often? In terms of when you talked about record keeping.
Personally, I think it should be done on a monthly basis, but that is my own personal. And where I come from on that is because when I look at some industry standards in our enclosed housing industries, so our dairy farms, our poultry farms, our hog barns, those kind of things, their industry standards in Canada require them to do specific things on a monthly basis. testing generators, testing backup systems, those kind of things. So I do recommend to my clients, do it on a monthly basis. It can be as simple as a checklist on a bulletin board in your office that you go through. Okay, we checked our backup generator. We did on a monthly basis, we do a walk around of our fences to make sure there's no fences that are broken and need of repair, those kind of things.
Mhm.
Just simple as that, with a little check mark beside it, who did it, the date it was done. It amplifies to our insurance companies that you are willing to work with them to make yourself be a better risk.
Mm-hmm.
Oh, good. Okay. So this is, how do you mitigate risk if folks are in an open field? And I know that happened to be when you were talking about trip and fall. And so, I mean, I know personally, I tell people that the land is uneven, but is there any other?
And that's absolutely, Scotty. So that's again, when we're talking about, when you're greeting those visitors and you're saying to them, hey, we're doing a walk through the field to look at the sheep or the alpacas or whatever. Please be aware, this is a working farm. The ground is uneven. So if you need a hand, hold someone's arm, et cetera, et cetera. Though, as long as you're doing that again is just proving again that you're working to make sure that people are aware of those inherent risks that come from being on your property.
Okay.
Yep,
Okay.
exactly.
Okay, this is going to be the last question. So lots of farmers lease their land. How does your farm insurance interact with the landowner's insurance? What is reasonable for a landowner to require for their own protection?
Yeah. So I think for starters, having a contract, of course, and have that reviewed by an attorney, just of, the contract between you as the landowner and the operating farmer. And then requiring that the operating farmer have you as an additional insured on their policy, and that they provide you a copy of it. You want to make sure that they've got adequate coverage in place so that if something does occur, it's not going instantly over to your insurance as the landowner. And just proving that, you were taking the steps to best protect yourself, and that they're also protecting their operation. And then I always recommend no less than $1 million of liability coverage for the landowner. And just making sure that, as the landowner, you have the responsibility to cover buildings as well on the property, so that those are on your insurance. So that's my 2 cents in that one.
We have higher liability limits that we recommend in Canada, but that's, what Kelly's saying is correct. We want to make sure that we have the contract in place. It's not just a handshake deal.
Okay. I want to thank you both very much. This was fascinating. It was
very, very interesting.
Yeah.
Obviously, there's a great interest with our crowd, right? We might need to do another one depending on interest in the future.
Yep.
We have the contact information for both Carol and Kelly here as well. And I guess I can maybe advance. I think we have just one more slide. Oh,
Yep.
Here we go. Our next session is at the end of July, and it's practicing your pitch. Book your calendar. And also wanted to throw out there, again, North America, we're looking at having a succession plan. So having somebody in the wings with Scotty and I that might be interested in helping out as a volunteer on the GAN North America. So please reach out to us and we can have a conversation. Would love to get some other people in line that's interested in developing the sector.
Okay.
So thank you all very
Yes.
much. You can
Thank
probably
you for
stop
staying on.
recording,
I'll
Scotty.
stop recording right now.